Now let's get right to our next guest. Joining me right now is David Strzeski, CEO, Sound Planning Group. Thank you so much for being with us. So as inflation sits at near 40-year highs, I don't think you expected much different print today than what we got. And we'll get another one tomorrow, and then we'll have sentiment on Friday. How are you feeling overall? People are talking about a recession.
Well, I think that they certainly are looking at recession if they're looking at their accounts and just seeing how quickly things have been declining here just in the last, multiple weeks and months. And so, we rallied hard out of March, but it doesn't seem like we have the same type of sentiment coming out of that time frame. Obviously, we've got the Federal Reserve now really tightening, which of course is changing some of that liquidity that a lot of corporations have, maybe a lot of individuals would have. Maybe they're not refinancing, and we're going to see some changes here in real estate. So I'm actually more concerned about a stagflation situation because that's, of course, going to be a slowing GDP, which we're just seeing right now with those inflationary upsides. And that is a very difficult market to be navigating, investing in, specifically for so many baby boomers today who are facing and entering retirement. And last year was the great resignation, with so many people retiring. So we're finding ourselves in a pretty unique time for sure.
Yeah, and the question was whether or not during that great resignation, as a lot of people did retire, whether or not they were going to come back to the workforce, because the labor force participation rate still not great. Wages have gone up, but they certainly don't meet that of what we've seen on overall on inflation, right? I want to get to some of the names that you like, because I saw there's some tech names in here, but final thought on the big picture.
Well, I think the big picture is, you just mentioned inflation. I think people should look at their own inflation. We've had more than 1 year of increases. And so if we look back at our personal budgets, I think it's actually important to understand how we consume, we spend, and what our personal inflation rates might look like. So there's my advice to the average consumer today. Be intelligent with your opportunity, because we need to be evaluating risk. We need to be evaluating so many different things right now. This is not a time to be complacent, for sure.
So as we look at our portfolios, you want us to think and invert what's going on in our brain. Growth, value, growth. Right now, we think value is the place to be, but it's probably growth, because growth may bring more value. So tell me a little bit about why you're saying this ultimately, because you think that maybe growth here is undervalued. And you're looking at some of the FANG names, but looking at Amazon in particular. Tell me a little bit about your thoughts.
Well, I think you have to look at what are you naturally using in life and what are the things that you don't see going away. So number one, that's a good place to start. I mean, I love Costco. That's like my favorite store to go to. Costco is something that I personally own right now. However, it may not have as much upside potential as an Amazon does, specifically because it is uniquely positioned within the supply chain. And it also has this amazing distribution through the United States Post Office. But we're looking at, hey, we've seen big numbers come down, so valuations look right. But let me just be honest here to say that nothing right now looks overvalued unless rates rise. If we have rates that rise exactly as the Fed has shared, then that changes the way that we borrow. That changes the valuations and the PE earnings for the future. So I think that we're seeing a lot of shakeup take place right now, just as a result of what we've just are being forced to metabolize with the increase. And then some of the other ones that are coming in the future in conjunction with everything else and a slowing GDP, et cetera, et cetera. So again, there's no simple place to be headed right now, but I think if you can find where you're going to be naturally utilizing things, and I don't see Amazon going anywhere.
And what's interesting is that you said you don't really see anything that's, really undervalued at this point. And if rates rise, that only makes it probably more difficult to pick a stock, right? I mean, if you have rising rates, is there something that's going to be undervalued? I can't even think of anything that would be a screaming buy with a higher rate. I know you want to look at Spotify, but is there something that seems, if we have rates at, a full basis point or more higher, is there something that would seem like a screaming buy?
Well, I'm just going to say right now, cash is king. Patience is important.
Yeah.
And it's important to understand the objectives of each individual investor, right? So if I've got someone that's right now in retirement, we're going to have a different approach than someone who's maybe in their late 30s like myself and has a long-term perspective in play. You know, I know the technologies and the companies are still world-class. The question is, do I think that they're good value long-term? And I believe that there's some great opportunities no matter what the price is. So I'm actually buying right now into these downs because we raised cash. But depending on how someone has come into this position, they may not be in a cash position, and they may want to look at reallocating or raising some capital here today, specifically while times are just not as certain.
Tell me about Spotify. This is the iPod Touch is going away.
Just a simple idea, you know, we're just looking at, there's places where I think that there can be some incredible opportunities. So Spotify is one of them. I will say also that I'm actually a pretty big fan of crypto, and I look at it maybe a little bit different than most people. I'm looking at it as purchasing algorithms of companies. But you know, as a reality here, there are moments and places that we can find ourselves in a great position to purchase wonderful companies with great opportunities in the future. But I think that we need to be more focused in our investing and not broad. So broad indexes today may not work out as well as those individual investment strategies that are looking at and evaluating sectors that are trending, places in the competitors here. You know, so what does Spotify's competition look like? Has it really peaked? You know, who's the CEO? Where are things trending? So you got the technical and the fundamental components that are just very important to be paying attention today. And I think there's a lot of people that I could talk out of both sides of my mouth, to be candid with you. We could go down, we could go up. I vote it goes up.
Right. Yeah, well, no, I get what you're saying, David. And just a final thought on crypto, since you mentioned it, how would you suggest people get into crypto?
You know, my first place was Coinbase, right? So began looking, doing some research. There's also some good YouTube videos out there, just to be candid. YouTube University can work out pretty well. But there's also a lot of bad advice and bad information. So again, don't put anything into crypto that you don't think that you can afford to lose, because there are coins that literally go to zero, including Bitcoin could, by the way. But the point is
so you think Coinbase is a good way to do it? Yeah, but you think
I think that there's a great open door there.
Yeah.
Their technology solid. There's a lot of opportunities. Just don't get sucked into the gambling thing, because it can really get people in and they get consumed by it, and that can be a problem.
True. A big one. David Struzeski, thank you. CEO of Sound Planning Group. Thank you, David.